Hey, Robert, is that you on the other line?
Yes, can you hear me?
Yeah, I can hear you. How are you doing today?
I'm good. How are you doing?
Doing good, doing good. How's the day treating you? You catching anything catching your attention out there?
Yeah, I mean, well, these names we're going to talk about today, I think, are pretty interesting. I do like this Juniper as kind of a long-term value play. And then, of course, just weeks of an earnings season, so every day there's been some excitement going on, up or down one way or the other. But, we're keeping it together.
Yeah. Barely, but there, right?
Exactly.
So let's delve into this Juniper play. I know this is one that Scott and I have talked about in the past, and I would have to say that I'm certainly on board with you here. Obviously, not the reaction we'd want from earnings, but it is what it is. And there was a few things in the quarter that kind of threw off the expectations for people. Obviously, the stock was bumping up into some key resistance levels, but why don't you walk us through the Juniper Networks Q2 results and point out some of the things that were sticking out to you?
Yeah, sure. So basically, just people are probably familiar with it, but they make networking gear like routers, switches, software, that kind of thing. They have three primary markets: cloud, service provider, and enterprise. And so basically, the stock got hit when they reported earnings last week. Their Q2 results were actually above consensus. They reported 48 cents with a 4-cent beat. Revenue was also upside. The problem was the guidance. It was actually pretty bad guidance. EPS of just 41 to 47 versus 51 consensus, and revenue was a little bit light as well. So basically, what happened, and I read the transcript on this, and they made some pretty good points on the call. Basically, what a lot of it was to do with just timing. The enterprise business actually pulled in the orders they thought were going to close in Q3, wound up closing in Q2. So there was some of that business was pulled into Q2. That's why there was Q2 upside, but it's also going to hurt the Q3 guidance. Another thing was the cloud and the service provider side of the business. There were some orders that they were expected to close in Q3, but now they're saying that might take a little bit longer to materialize. Because basically Juniper's going through kind of a pretty big upgrade cycle of its own in terms of their servers and routers. So as some customers will do the upgrade, some don't, it creates a little bit of choppiness, like some stop-starts. So it's kind of difficult for them to predict exactly when they can recognize that revenue.
And that's the MX to the P.
Yeah, exactly.
So it's the next generation platform that they're going to.
Exactly. So they said it's going to take a few quarters, and but it doesn't sound. It sounds like more. It's not a competitive issue. It sounds like it's more of a timing issue. Like these deals will close. It's just hard to know really when. So it might be more, instead of being Q3, it might be Q4 or possibly early 2019. So the thing with what makes Juniper interesting is you have to kind of look at the bigger picture here. Like what are this sort of industry things that are pushing this forward, and the three major upcoming catalysts are 5G broadband, 400 gig cloud switching routing, and the enterprise multi-cloud refresh. Sell-side analysts are expecting these to be some pretty huge tailwinds over the next few years, probably starting in 2019. So the second half of 2018 might still be a little bit choppy, but there's still you've got these bigger picture. If you can be a long-term investor and just wait for these other events to cycle through, you're going to be fine. It may be Q4, it may be early 2019, but it's going to happen at some point. If you just be patient with it, I think you'll be rewarded with this stock.
Okay, so some of the things, and you could probably argue too that Q2 results were probably a little light, right? Because I'm just looking through. Anybody that has a chance, please check out Rob's yield comment that he posted at 12:23 on Juniper, and you can kind of follow along with our discussion here. He lays out a few points, and just going through it, you could probably argue too that it was even a little bit of a lighter quarter, because you discussed how they mentioned on the conference call that there was a little bit of pull forward for some orders too. Is that correct?
That's correct. Yeah, especially for the enterprise side of the business. Yeah, some orders they thought were going to close in Q3 wound up closing in Q2. So Q2 was probably a little bit overstated, and it also kind of explains why Q3 is coming up as light as it is. So So that's kind of probably what happened there. And also they did say they closed some cloud and some service provider customers, or it's some deals they thought were going to close in Q3. It sounds like it might close in Q4, maybe early next year. So you just kind of have to be patient. It sounds like these deals will close. It's just a matter of they're having trouble predicting exactly when.
Right, and like you said, not unusual for something like this to happen in a transition year, right? Which
definitely not.
I mean, basically, this is a transition year for Juniper.
Yeah, that's a good way to look at it. And
that does not put a lot of pressure on their Q4.
Not necessarily. My sense is I think investors are giving them a lot of leeway here. Like, I think investors are starting to realize, we're not really sure when this is going to turn around, but it's going to happen. And the fact that the company is so aggressively buying back their own stock is a good sign to me. Like, their buyback yield is 11.7%, which is huge. And on top of that, you get a 2.8% dividend. So they're spending a lot of money to buy back their stock right now. That's usually a really good sign. That's when a management is putting their money where their mouth is.
Right.
Yeah, it really is, because they could spend this money on increasing capacity. They could go out and get debt. They could purchase another company. But the fact that they're using it on their stock means like they think their stock is the best investment, the best return on capital, the best ROI. So that's always a good sign to me. So I really like that about it.
Now, I mean, again, just playing a little devil's advocate here. If I'm looking at the revenue slowdown of 8% on a year-over-year basis, and that cloud slowdown again, 26% year-over-year decline, that is more or less explained away by the transitory nature of the business cycle right now for them, would you say?
Yeah, it is, and in fact, and also the average selling prices for the new generation are actually a little bit less than the other generation. So that's also having an impact as well. But basically, that's just kind of what's hurting them right now. But I think over time it'll be fine. But it sounds like they're starting to stabilize. So basically, they're saying a lot of this transition is going to soon be behind the company now that the pricing has started to stabilize. So definitely Juniper's had a rough first half of the year, and I think people were kind of expecting the turnaround to happen a little bit sooner, and it's maybe taking a little bit longer than expected. That's kind of what's hurting the stock a little bit. But I'm okay with that. If you're a long-term investor and you can just kind of wait it out, I think there's good potential here, and they make a lot of money. I mean, so they're not going out of business, nothing like that. It's just a matter of when these deals are going to close and when it's going to materialize into the revenue.
And you talk about the stock underperforming. At the same point, it's pretty much been in that 24 to 28 range. So it's not like it's been a wide band of riskiness for investors. And just to clarify out there, Rob's on our briefing in play plus side, so he does a lot of GrowX. So he doesn't really have that short-term horizon. He's much more of an investment analyst, and is looking for those longer-term plays. So this Juniper really fits right into the basket. I know Scott was listening in too. I don't know if he's got any additional questions for you on this Juniper, but I like the way it's just kind of cutting in that tight range and holding up above that 200. Scott, did you have anything that for Rob on this one?
Right. So when it comes to these longer-term investments, the first advice that I always give to everyone is stop looking at a daily chart and focus more on the weekly and the monthly time horizons, because if you basically have to look at technical analysis works best when you line up your time frame with the chart. And so for something like these names that Rob focuses on, where they're going to be longer-term, intermediate to longer-term investments that you want to hold for months or weeks, you're always better off looking first at the monthly chart and then looking at the weekly chart. And I would just say ignore the daily chart at all costs. So with that said, looking at the monthly chart of Juniper, we have a multi-year uptrend line that's still in effect off the 2012 low that's been holding up pretty steadily over the last couple of years. And it comes in play right around the $25 area, I'd say. So overall, like Gavin, you said, this stock has been kind of just sideways chopping between 24 and 28 lately. On a longer-term basis, that's pretty much your line in the sand, this low 24 to 25 area. And to the upside...
The risk is defined in that situation.
Yeah, exactly. So if anything, if it started to crack down, say below 24, 23, I'd have to assess what's going on. Is the broader market going through a correction of sorts? Is the sector getting hit, or did the company itself come out with some sort of negative news where they cut the dividend or stopped buying back, or or got it lower or did whatever? So you have to kind of assess it. And again, this is where the longer term fundamental aspect of everything comes in. Technically, on the long-term side, it's pretty simple. You just look at the trends. But to the upside, this stock has been, like you said, range-bound for almost 3 years now. The good thing is that it's narrowing in range. So where it was once wide and loose, trading about 2015, 2016, the price action has been getting tighter and tighter in this stock the last couple of months since late 2017. And that's usually a good sign. Usually these periods of contraction and volatility tend to set the market up for a expansion of volatility, otherwise known as a stronger momentum trending type of environment. So with almost 2 years of sideways price action going on here in the mid $20 area, 25 to 28, whatever you want to say, I think this stock appearing on the yield focus list, and with all those great things that Rob was just talking about, I think this might be another one I have to start looking at to put into my longer term portfolio. It looks really nice. I like it.
Yeah, and it's not one of those ones that's really exciting. Basically, it's not going to move a lot day to day. It's just one that I'd feel comfortable holding it and just waiting for the turnaround whenever that might be. It might be later this year, it might be early 2019, but I like the story. But
yeah,
hey,
awesome.
And then, Rob, when we're looking at the valuation of this compared to some of its peers, I know we were talking about Cisco earlier, and ANET, I think I'd throw in that telecom router space. And when you start breaking down Juniper, it's got pretty favorable valuations to these guys, because Juniper's forward P is about 12.8 times. Price to sales is about 2 times. You already mentioned the dividend yield, which I got coming in at about 2.75%. Right? Then when you compare that to a Cisco, Cisco is trading at 14.6 times forward PE with a 4.1 price to sales. The dividend yield's a little higher, 3.1%. But again, that you can kind of make up with that with what you were talking about before, with that buyback yield at around 11.3, I think you said?
Yeah, 11.7. Yeah, and don't underestimate the importance of that. They're buying back a lot of stock. So even if the stock were to go lower, they're probably going to be buying it on the open market. So that's going to help support the price just on their buybacks alone. So that's something to just keep in the back of your mind.
Yeah, and then when you compare it to ANET, that's trading at 32 times forward PE and 11.4 times price to sales, and doesn't even pay a dividend. There's a lot of value in this Juniper compared to some of its peers. So, Rob, you would say the biggest risk to it is just this management of the transition from the MX to the PTX platform.
Yeah, that, and then maybe these larger industry ones take longer, like 5G broadband and moving from 100 gig to a 400 gig switching and routing. People are talking like it's going to start to take place next year and it's going to be big over the next 3 years, but it's these things. It's always hard to predict. I mean, it might be 2020 before it starts to really kick in. So that's kind of the risk I see, is just the timing of it. But it's sort of like the tortoise. I think at some point it's all going to happen. It's just a matter of when. And I think if you keep like a fairly good stop loss limit on it, like maybe risk maybe 15% or something like that, I think you'd be fine with it.
Scott, what would be a level on the charts that would have you concerned about a longer-term investment thesis for it to break down below?
Probably that longer-term uptrend line that I highlighted. Unfortunately, I don't have access to the charts, but if you look at a monthly time frame, it's pretty evident that the stock has been in an uptrend for about 6 years now off that 2012 low. You can draw a nice solid line connecting all the lows from the prior years, even right up until this year, which came into play right around $23. But obviously that line, that angle's increased here over time. So for me, I just say 52-week lows at this point, which, like I said, if it comes down to 25, 24, that's where you maybe want to add a little bit more. And that, again, Rob just said about 15% or so.
Yeah, so I think that matches up pretty closely, right?
Yeah, something like that. I think he's giving a little bit more wiggle room down to about $22. But for me, if the stocks start breaking down to 52-week lows, that's, again, where I want to start saying, okay, is there actually something wrong with the company, or is this just a broader market correction out of favor with the sector at that time? My one concern about this name, and actually I wasn't thinking about it until you guys just mentioned it, are the peers. How much, I look at ANET. ANET's been on fire for the last 2 years, and Cisco has actually been trending higher as well for the last 2 years. Juniper just seems to be going sideways, so I'm kind of, you are kind of looking into you're buying the laggard name in the group, it looks like, which I'm not always a big fan of. I tend to go more towards the ones that are already showing leadership and breaking out, but I am enticed by listening to the buybacks and to the dividend yield and like I said earlier, the tight consolidation, quiet period going on for a couple of months and years now. Usually does lead to an expansion of trending action. So I might just dabble in it for now, sometime here during the summer, but I'm not in a rush. So.
All right. So moving on, Robert, there was SEDG, which had been a GROWX. I think it fell out a couple of weeks ago from
it fell out.
list, right? So we've noted some of the heaviness in the name, and obviously they came out with earnings last night. This was on the heels of their competitor Enphase, who had missed expectations themselves. So SEDG obviously disappointed. You put together a nice story, Stock. I'd highly recommend everybody to go check that out and look at Robert's take on the quarter. But we also have him here right now to kind of run through and update us, just to give you a heads up. This stock is still sitting on that 200-day moving average. Hasn't really moved off of it too much. I'm still interested in playing a bounce off this. But Robert, why don't you run us through the earnings report and some of the thoughts you have from it?
Yeah, sure. SolarEdge, it's been an interesting name. They're kind of unlike a lot of other solar companies because they actually have, instead of just being a commodity type solar play, they actually have some patented technology that makes their optimizers work like on at the module level, and allows it changes current voltage on the module level, so it makes it a lot more efficient than other ones where the optimizer might be like for a whole string of modules. So it's definitely is a little bit different than other solar companies. With that said, the stock's getting hit today. This was actually their first EPS miss ever. They missed, I think it was like 2 cents. They came in at 82. I think 84 was a consensus. I'm not quite sure, but I think it was their first miss, at least in the history since we've been tracking them at briefing, or at least through 2015. This is their first EPS miss, and I think that's kind of spooking investors as to what's going on.
Let me ask you this, Robert, real quick. With something like that, because you see the miss, and then you see non-GAAP EPS was up 49% year over year, and revenues were up nearly 67% year over year. That's pretty nice growth, 8% sequentially. Do you think analysts might have gotten a little bit ahead of themselves on
it looks like it, because they're so used to them having such huge beats, so maybe some analysts got a little bit greedy and put some higher estimates, some higher models out there, and that might be what does it. Another problem is they don't guide for EPS, they'll guide for revenue, but no EPS. So analysts are a little bit of the revenue was pretty much in line, but because they guide for it, but the EPS is not, there is no guidance for that, so the analysts are kind of in the dark about that. So anyway, that gives a little more explanation as to why they might have missed on the EPS, because a big thing about that are margins, and that's another problem with the quarter, is that the non-GAAP gross margin, it actually increased year over year, but it fell from Q1. In Q1 it was 38.4, and this quarter was 36.5. So you don't like to see that, even though revenue increased by 8%, margins decreased. You generally like to see when revenues go up, margins should also go up more because they're spreading out those fixed costs over a larger revenue base. So margins should go up. So the fact that you have increased revenue and decreased margins, that's a kind of a concern as well. So hopefully it's just a short-term thing, but we'll see. But
That's kind of been the concern going in with the solar space, though. I mean, we've talked about the pullback in First Solar, and we saw the average selling price, as you pointed out, in your story stocks showed a decline, which obviously leads into a bleed into the gross margins here. Now, a lot of the concern has been oversupply coming from China after China's government cut down their gigawatt guidance for solar growth. And one of the concerns for SED-G has been competition increasing from Hawaii, right?
That's true. Yeah, that's.
Was there any mention of that on their?
It was the first question they got in the Q&A. It's like, So you could. I read through the Q&A as well, and it's clear that analysts are concerned about this Huawei. I don't know how you pronounce that, if I'm saying it correctly, but there's a lot of concern about that they're going to come in with a competing product. They really haven't gotten into the U.S., but it seems like this competing product is starting to show up in Germany and Australia and kind of the smaller markets. And in fact, SED-G just filed a patent lawsuit against Huawei in Germany, and so they definitely.
Good thing it wasn't in China, right? That would be a bit of a kangaroo court.
Yeah, that's true. That's true. So, but it shows that they're going to be aggressive about protecting their intellectual property, and that's a good sign. They did say that their IP is actually stronger in the U.S., so if Huawei were to come into the U.S., it kind of sounds like they would even have better patent protection in the U.S., so that's a good sign as well.
Some tariff protection too, right?
Yeah, and they did mention, I think they mentioned tariffs, but I think it was more on the component side, like the components they use to build their product comes from China, but they said it's manageable, but that is something to kind of keep an eye on as well, that might be a little bit of an issue.
SolarEdge doesn't break down their international versus domestic sales.
You know what, they might.
I didn't see it in their press release, so I was just kind of curious.
They might have on the call. I don't remember. I think they might have offhand exactly, but I think they want to be around 50-50 by the end of the year, if I remember correctly. But yeah, I think So basically, right now it's about a third is from international, but they want. Oh no, I'm sorry. Excuse me. That's actually commercial versus residential. They want commercial to be bigger part of the business. Right now, commercial is only a third, but by the end of the year, it's going to be 50-50 with residential. So, so I'm not quite certain about the international question.
Okay. Valuation for SED-G is certainly not frothy, especially when you look at a company that's run from 17 to 68 and then, obviously pulled back a little bit here. Do you have any thoughts on the current valuation of it?
Yeah, it's not too bad. I mean, it's trading at a current PE of 4 to 15 times, which is pretty reasonable. But I think right now the stock's going to trade more on sentiment. Is this Hawaii going to be a real threat? I think that's really, because a big reason the stock has done so well is like they have a defensible technology that's patent protected. And now you got this Hawaii coming in, and it seems to be, like the last few conference calls, it's been a big topic among the analysts, whether this is going to be a real threat to them or not. So I think it's going to trade more on sentiment. Than necessarily on valuation, but because it's a pretty potential threat from this Chinese company coming in. But we'll see what happens.
And we are seeing a small bit of buying coming into SED-G here towards the close as it continues to hold that 200-day moving average. Scott, what are your thoughts on SED-G here, and do you have any questions for Rob?
No, this stock made the emerging growth list last year in 2017, and then it eventually moved up to the liquid momentum focus list. So I've been a big fan of it, and I took a few trades in it over the course of the last year as it just set up really nicely on the charts. And also one of the things that I recall seeing, I think I saw one of the management, I can't remember which one, showing up on Bloomberg one day, and they were talking about the product, and I was just... It made sense to me. I think one of you guys described it, or maybe the CEO did, or whoever it was on TV that time, saying, because I don't know what modular optimizer means or anything else like that, but when you start saying, hey, it's like a Christmas tree, a string of Christmas tree lights, where instead of having one light go out, take all of them out, instead it's an individual one that you can just easily replace, and now this is just being applied to solar panels. I didn't even know that was the scenario where a whole field of solar panels or whatever it is can go out, where you just only one goes out and you immediately replace it.
Yeah.
Well, that's just ingenious to me. That's like, oh, well, yeah, that's a good patent to have, on that type of technology, especially if solar is going to be the wave of the future of sorts. So it just became the one solar stock that I put all those pieces of the puzzle together, and that's really what I do to find the stocks I like to trade. That really was the selling point for me. Lately, this year, after the last quarter and this price action going on here, it's not looking so pretty. It's got potential support here right along the the June, July lows, and the 200-day moving averages around $46, $47 for a short-term scalp or bounce trade. But overall, I would actually just kind of hold off and see if it gets down to 40 again, in the low 40s, and then I maybe look at it again. I don't know. And then when you start mentioning lawsuits and patent rights and infringements, those things can get messy. I try not to. I'd rather have not have heard that.
Okay.
Because it always seems like everybody's suing each other, and then to have your revenue stream so dependent upon whether a lawsuit goes through. I'm trying to think. I want to say Rambus was like that, or somebody else. They just started suing everybody, and it just was like. It just gets dragged on for years, and then the stock just seems to suffer. So
and it's hard to predict. It's almost like a biotech, whether they get FDA approval or not. You don't really know until that day. Boom! It's like if they win or lose this case, the stock's going to move big either way. But it's hard to predict that. So yeah.
Yeah. So it's a tradable stock for sure. It's on my radar. Like I said, I'm not doing much here on a Friday of summer or at this level. I might watch it next week to see how it reacts around 47, 46 for a little bit of a day trade, or maybe a bounce type of play for a swing. Maybe even consider shorting it if it starts to aggressively break down below this current support level, as I am eyeing more of the low 40s near that gap from January. So, yeah, that's it.
Yeah, and I'm not a big fan of it fundamentally. I was just wanted to get some color on the quarter. So,
right,
cool. Just keep that as a point. But
yeah, so. Next one we got coming up here is one that I hadn't been paying attention to in some time, and Scott and I discussed it earlier, but it's just had a monster run, and that is SodaStream. Do you want to take us through their earnings?
Yeah, actually, I can do that. It's funny because Scott and I we've joked about this stock over the years. He just hates it. Like, how could anyone do this? And it's funny how the stock has come back. What they've done is they completely changed their model. They used to do carbonated soda, and the stock just went down the tank. People didn't like it. It tasted bad.
Right.
The filter would get dirty. So what they did is they made a complete 180, and now it's just all they do is sparkling water, which is sort of the big trend. Like LaCroix, Polar Water, all these, our sparkling waters are popping up everywhere, and that's all they do now are sparkling and flavored waters. I think it was a brilliant move. And the stock is just, it's just really smart what they did. They didn't give up. They just completely got out of carbonated soda and got into sparkling water, and that was a few years ago, and the stock's really turned around.
Yeah, that was my guess. I was talking with Gavin earlier, and I said they must have left the soda business because the flavors were so horrible years ago when we tried it. And I don't know anybody that owns this. And my only logic was to Gavin, I was like, well, the technicals are so strong. The only and people have moved away from soda and whatever it was for what health reasons and whatnot, that it seems like carbonated flavored water seems to be all the rage. And I said exactly to Gavin that. I said they must be moving into more of that space, because I can't think of any other reason why this stock is going up. And here's the question I have for you, Rob. Do you own one of these?
I do not.
I can't find anybody. If anybody listening, please go hit that Talk to Us link at the top of the page. Tell me you own it and love it. I can't buy something that I don't know or have met anybody that owns one of these things. So it's very difficult to.
Well, they're huge. They're huge in Europe. They're not quite as big here yet, but
okay. All right.
Well, it's an Israeli company, right?
They're based in Israel, but they're huge in Sweden and the Nordic area, and I think in Germany, France, and the U.S. They're starting to make some penetration in the U.S. It's still that's still they see a lot of runway with the U.S. and a lot of upside there, but it's still kind of new here. So we'll see what happens. Maybe people are more into sparkling water than soda, but we'll I guess time will
tell. How's the
tell.
valuations for it up at the
It's definitely pretty out there. I mean, they're supposed to earn like 431 this year, so they're trying to get, well, yeah, so it's up like
27
25.
times.
Yeah, so it's definitely pretty pricey, I would say. I don't think I would buy it up here, and again, I'm not here to advocate purchasing it. I'm just, I want to get some little color on the quarter, and just kind of do it from that way. And one thing, just real quick, I wanted to mention on the quarter is that a lot of the upside was from favorable FX, just a lot of it was just foreign exchange. So that accounted for $20 million of upside. So people just need to keep that in mind. I'm surprised the stock went up so much when they reported, because they were up right up front about that and said, because the upside of revenue, I think they came in at 171, and I forget exactly, I think it was like 140, but 20 million of it was foreign exchange. So I'm surprised the stock ran so much, but it was definitely a good quarter, but it just seems a little bit, it seemed like a little bit of an overzealous market.
It has a low float, though. Mind you, it's only 20 million.
That's true.
Out there.
That's a good point, yeah.
Hey guys, I just want to break in real quick with the headline that we're getting. One that could be of interest. Senators are warning Google that a China browser that was discussed earlier in the week would risk complicity in abuses. Basically, earlier this week there was some commentary that Google could launch a browser that would be allowed to be basically controlled by the Chinese government and censor people. And on that news, Baba and Baidu both saw some selling pressure here. So the fact that senators are coming in and warning Google, that could be a positive for Baba and Baidu here late in the afternoon. So just wanted to point that out to people. So back to the soda discussion.
Well, that's pretty much it. I mean, it's a really good quarter. They just really blew it out, and they said they're really bullish on the second half of the year, and Q4 is a huge quarter for soda because a lot of people buy it as gifts, so that holiday season coming up could be a huge quarter in Q4. But I like the story a lot. I think the valuation's gotten a little too rich for me, but I definitely would keep it on the radar for on pullbacks. That's kind of my take on it right now.
All right, fantastic. And then Robert, I believe on Tuesday or earlier this week, you posted new emerging growth stocks, so just wanted to point out a couple of new additions. WWE coming in at number 5, Friedman Industries, ticker symbol FRD, coming in at number 6, and Systemics, ticker symbol SYX, in at number 10. Any quick thoughts on any of those new additions?
It's funny. I like this WWE. I know it sounds silly, but they've done a great job of monetizing that brand. They do a lot more than just wrestling. They do reality TV. They have their own TV channel. They do a lot of licensing.
Are you saying wrestling's real? Yeah, is that what you're saying?
It's real money. That's
what I heard. It'd be a lot cooler if you talked about this in a Randy Macho Man Savage voice.
You got to hear a story quick. I don't mean to interrupt quick. So I was on vacation around here, and I just went to a family reunion and stuff like that. And I actually found out that I am related to a wrestler that is in the WWE. It's like my third cousin. Apparently, I never even knew I had a third cousin. They show me a picture of this guy. He is the complete opposite of what I look like.
Which wrestler? Is it a jobber or is it one of the champs?
I don't know. His name was Big Cass or something like that. I don't know, but I can tell you this guy.
I've seen you, and Big Cass doesn't jump out at me when
this guy's like a golden Adonis. He's just like twice my size. His muscle, I think his bicep alone is bigger than my torso. I mean, it was just ridiculous. And I'm like, what the hell genes did I get on this side of the family? So anyway, I just had to throw that in there. Just triggered.
No, that's totally fine. That's totally fine. It just. I like it a lot. They signed these 2 new TV deals with was it USA Networks and Fox Sports. Basically it's worth 3.6 times what their last deal was with NBC Universal. So it's huge difference. They're going to be able to monetize that. That kicks in next year. So they're just doing a great job of putting and they're also going more after the women's market too. They're doing like some women's series, some women's events. So they're just doing a great job in terms of putting everything together. But I think the stock's a little too rich up here for me to chase. But again, on pullbacks, I would consider it. But I think it's a little bit too rich for me on a valuation basis.
All right, good stuff. All right, well, do you have anything else for Robert here, Scott?
Yeah, I just have one thing. So, by the way, I'm going to send you guys the Wikipedia on this guy. He's 7 feet tall, 290 pounds. I mean, I don't know how the hell I'm related to that.
I don't know. I'm surprised he's only 290.
Yeah.
Yes, that's actually pretty thin for that height.
Anyway, actually, the one going back to SodaStream. So there's no way I'm buying this thing up here at this level. It's a trading vehicle at this point. 20 million shares at $116. You got a lot of volatility going on here. The volume's pretty thin. Trades less than 500,000 shares on a daily basis. The ATR though is around $2 or $3, which is what I like. So small size positions just to kind of mess around when you're feeling kind of frisky, looking for trades and stuff. If it does pull back in, I'll be looking for some sort of consolidations and maybe a gap support test to get involved.
So a quick question on that. So I'm not a technician at all, but it's the fact that it was kind of consolidating from March to July, the fact that it broke out.
Yeah.
I thought that was that's always a good sign, isn't it? Or no? Is it? Okay.
100%. I mean,
but it's just too much, I guess, too much of a breakout. Or
It's great. I mean, there's other stocks like that can do this, that have done the same move. But for me, I think if I'm a hedge fund or I'm a portfolio manager, you're just not going to take large size in this type of thing because the liquidity is just so liquidity and volatility. That you got to take that into account for risk parameters. Yeah. And to me, it's like you just dabble in it, and it's a small percentage of the portfolio. And that's the way I would treat it too if I was trading it. But anyway, that reminds me of the old Keurig GMCR Green Mountain Coffee Roasters, which actually made its debut again a month ago under the ticker KDP. That's Keurig Dr. Pepper. I can tell you this much. So I did have a Dr. Pepper, probably my first one in 2 decades this week, and it is just as awful as I remember. It is not a good flavored soda.
Some people love it. I hate it too.
Yeah. But on the opposite side of things, I believe Keurig Dr. Pepper also owns the Snapple brand, which the Snapple brand, I have a few of those a year, love the iced teas and everything. And the Keurig, I probably live and die by this thing. I have about easily 3 to 4 pods a day. I know my wife does. We have the machines. Everybody I know owns a Keurig in their home. Coffee-wise, everybody's drinking this. In-laws, cousins, families, everybody. So for me, and then I'm looking at this yield. I don't know if that's legit or not, but is this like a 9% yield on this thing? I don't think that's right. I got it. That has to be.
Which ticker is this?
KDP. Let me check a different source here because that just seems way out of control.
I've seen 9.7 myself.
So anyway, I have to see if that's legit. But if
we were looking at this before, Scott. I remember something was going on with this. I wouldn't be. I wouldn't be investing on that because I do think that there's something involved in that. There's a one-time special cash.
Yeah, or something. I think that's what it is. Yeah, it has something to do with the merger. Maybe there was a dividend payout with the merger, or something like that. Maybe I don't know.
That's true, but even then, if that 9% drops down to 2%, say, or 1.7, I'm still going to look at this stock as a better investment than soda, just because it doesn't seem like it just seems more. It's coffee. I mean, that's the coffee stock to own. If you own Dunkin' Donuts or Starbucks, I think the Keurig is the next one to go after. So I think the KDP is definitely going to be on my radar as well. And that's it. That's what I contribute. So
they report earnings next week.
I know a lot of people with the Keurigs, so I don't know anybody with the SodaStream like you're saying.
Yeah. So they report Wednesday before the open. Just FYI.
All right. Cool. On my radar.
One to throw on the radar. All right. We got anything else over here?
No, I think we're good.
Okay, nice. Well, Robert, thank you very much for joining us as per usual. Robert will be updating his GrowX on Monday, so we'll keep an eye out on that, see what new additions come on. But again, we're looking to have him on as a weekly guest here, just to kind of discuss some of the investment fundamentals behind some of the names that are being discussed over there.
All right, sounds good. Thank you so much.
All right, Robert. We'll talk to you soon.